How much money do I really need to purchase a home? In this video, I'm going to discuss the costs you should expect outside of the down payment, and I'll even include an example of what this looks like in actual dollars. What's up, everyone? Brand the Mortgage Man here, and I've helped more than 10,000 home buyers over my 20-plus year career, putting me in the top 1% of loan originators nationwide. Let's get into it. The amount of money you need to purchase a home depends on various factors, including the home's purchase price, your loan type, and other associated costs. To determine how much money you need to factor in the following: your down payment, your closing costs, how much homeowners insurance is, how much the property taxes are, what your moving costs will be, and do you want to have and need an emergency fund? Planning for these costs can help ensure a smooth home buying process and avoid unexpected financial strain. So let's talk about the down payment. Your down payment is going to vary depending on the type of loan you're obtaining. So conventional loan is typically to be a 3 to 20% of the home's purchase price as your down payment. A larger down payment can help avoid the private mortgage insurance or PMI and potentially secure better loan terms. FHA loans, they require a minimum down payment of 3.5% of the purchase price. VA loans, typically going to be no money down, although there may be a funding fee if you're not an exempt veteran, that can actually be rolled into the loan. USDA loans require no money down, but you have to meet the eligibility requirements based on the property's location, your family size, and your income. Now, let's talk about your closing costs. Really big topic. Closing costs typically range between 2 and 5% of the home's purchase price. And these costs are going to include things such as loan origination fees, right? Costs from the lender, charged by the lender for processing and underwriting the mortgage, appraisal fee, the cost for evaluating the home's value, title insurance. It protects you against title disputes. The ownership of the property is the title to the property. Home inspection fees, checking the condition of the property. That's what a home inspector does. Prepaid taxes and insurance. This includes property taxes and homeowner insurance that gets paid in advance. Now let's talk about homeowners insurance in general. The annual premium. This varies depending on the home's value, location, and coverage. Every property they can be next to each other, can have a different annual insurance premium, right? Here in Florida, something we are concerned with are hurricanes, especially in South Florida. So a home with hurricane protection is going to come with a cheaper insurance premium than a home without one. The age of the roof is a huge factor. A newer roof is going to result in a less expensive insurance premium than a home with an older roof. Property taxes. You're going to pay the prorated amount. So property taxes are prorated at closing. The amount you need depends on the local tax rates and the home's assessed value, and is often paid into an escrow account. An escrow account is an account that's held by the lender where they collect property taxes and homeowners insurance. They'll collect those as part of your monthly mortgage payment, but at closing, you need to establish those accounts. And it's going to require about 3 months of homeowners insurance and 4 months of property taxes to be collected in that escrow account by the lender. Now, there are other costs you need to consider that you may not be thinking about and are not lender related, not realtor related, but they're true costs that you're going to incur, right? Moving costs. This is going to vary. It depends on the distance of the move, the amount of belongings you have. I mean, the cost can range from a few $100s to a few $1,000s, depending on exactly where you're moving from and what you're moving. An emergency fund. This isn't a requirement. At least it's not always a requirement, right? You're not necessarily required to have money left over after you close on a home, but it's highly recommended. It's a good idea to have a reserve of 3 to 6 months of living expenses, including the mortgage payments, to cover unexpected costs or financial challenges. You never know what's going to come up after you close on a property. You don't want to leave yourself with a bank account that's completely depleted, has no money for a rainy day, we'll call it. Let me give you an example of what the calculation looks like. So you're buying a home for $300,000, and let's just say you're using a conventional mortgage, you're putting down 5%. That means your down payment is $15,000, right? 5% of $300,000. We'll say your closing costs are that 2%, so $6,000. You need homeowners insurance. We'll call your homeowners insurance $3,000 for the year. You have to pay interest on the new mortgage from the day you close. Let's just say you were closing in August of 2024, middle of the month, you pay interest from the day you close through the end of the month in which you're closing. All that's collected at closing. So it's called prepaid interest. So let's just call that $1,000 being collected. You need your escrow reserves, right? I mentioned 3 months of insurance, 4 months of taxes. Let's call that $2,000. This means that your total initial cost to buy the property, your down payment plus your closing costs, in this example on a $300,000 property, 5% down, is $27,000. So if you're new to home buying and you were thinking you only needed $15,000, right, the down payment on that property, this may be a surprise to you. But it's better to find out from me now before you go under contract on a property than to find out after you've already gone under contract on a property. So it's important that you receive an itemization or a loan estimate from your lender at the time you get pre-approved to purchase a home. Don't wait till you go under contract on a home. You want that information when you get pre-approved. This will help you avoid any unwanted surprises when it comes to the overall cost once you're officially under contract on a home. If you find this information helpful, make sure to subscribe to my channel so you can continue educating yourself on real estate and mortgages, and make sure to leave a comment below if you have any questions about your own scenario. I reply to 100% of the comments left on my videos.